Ayo, listen up. This ain't about getting rich quick. This is about getting rich right. You see all these hype beasts chasing meme stocks and crypto comps. That's not investing. That's gambling with extra steps. While they're out here looking for the next moonshot, the real OGs are quietly building generational wealth the boring way. Value investing ain't sexy. It ain't flashy, but it works. This is how Warren Buffett built his empire. This is how the actual wolves of Wall Street eat. And now I'm gonna teach you the game. Let's break it down. Level 1. The realization you're being fed bullshit. The hype economy is designed to wreck you. Social media, financial news, all these influencers, they make money from your attention, not your success. They get paid when you trade, when you panic, when you FOMO into the next big thing. Value investing is the antidote. It's about ignoring the noise and focusing on what actually matters, the fundamentals. You're not investing, you're speculating. Buying something because you think it will go up. That's speculation. Buying something because it's worth more than you're paying. That's investing. See the difference. One is hoping, the other is knowing. The market is a voting machine versus a weighing machine. In the short term, the market is a popularity contest. Stocks go up because they're trendy. In the long term, the market is a scale. Stocks eventually reflect their actual value. Value investors buy when things are unpopular and wait for the scale to do its thing. Level 2, the value investing mindset. Margin of safety is everything. You don't buy a $100 bill for 100. You buy it for 50. That $50 discount is your margin of safety. That's what protects you when you're wrong. Be greedy when others are fearful. When the market is crashing and everyone is panicking, that's when value investors are shopping. When everything is pumping and everyone is euphoric, that's when value investors are cashing out. Think like a business owner. You're not buying ticker symbols. You're buying pieces of businesses. Would you buy the entire company at this price? If not, why are you buying the stock? Level 3, the Gen Z value investing playbook. The metrics that matter. Price to earnings ratio, how much you're paying for each dollar of profit. Price to book ratio, how much you're paying relative to the company's assets. Debt to equity, how much debt the company has relative to its equity. Free cash flow, the actual cash the business generates. Where to find value, beaten down sectors that everyone hates. Spin-offs that institutions are forced to sell. Companies with moats, competitive advantages that are temporarily struggling. Small cap stocks that Wall Street ignores. The research process. Screen for metrics, low price to earnings, low price to book, high cash flow. Read the annual report, especially the management discussion. Understand the business model. How did they actually make money? Calculate intrinsic value, what the business is actually worth. Wait for your price. Be patient and disciplined. Level 4, the execution, from zero to value investor. Phase 1, the education, first 30 days. Read the classics, The Intelligent Investor, Security Analysis. Follow value investors on Twitter and read their letters. Practice with paper trading before using real money. Learn accounting basics to understand financial statements. Phase 2, the process, months 1 to 6. Start small with your first value investments. Keep an investing journal to track your thesis. Focus on process over outcomes. Good decisions can have bad results short term. Be patient. Value investing takes time to work. Phase 3, the scale, 6 months and beyond. Add to winners when prices drop further. Cut losers when your thesis is proven wrong. Stay disciplined even when it's boring. Keep learning and refining your process. The ultimatum. You have 2 choices. 1. Keep chasing hype and hoping to get lucky. 2. Start doing the work and investing with certainty. Value investing isn't easy. It requires work. It requires patience. It requires going against the crowd. But it works. It stood the test of time. And it's how the real wealth gets built. Your move.